Hey, Scott. So Bitcoin has now erased all of its gains since President Trump's inauguration as forced liquidations accelerate, volatility spikes, and risk appetite fades across the market. More than $1.3 billion in leveraged crypto bets were wiped out in the past 24 hours alone, pushing those funding rates negative and thinning out market depth. Liquidity has dropped sharply, and traders are rushing to hedge, driving short-term volatility even higher. Meanwhile, a key support for Bitcoin, those spot ETFs, demand is starting to show signs of strain. Flows flipped negative this week, with Thursday marking the second worst day of outflows since they launched nearly 2 years ago. The stress is also hitting those crypto treasury plays. Arkham intelligence data showing that Michael Saylor's strategy, the largest corporate holder of Bitcoin, cut its Bitcoin holdings by 47,000 coins, though Saylor refuted that sale on our air earlier today. Those shares down around 17% so far this week. Tom Lee's Bitmine immersion, along with ETHZilla and SharpLink Gaming, are all sharply lower, exposing pressure in Ether proxy trades as well. And crypto, I will say, it remains tightly correlated to the NASDAQ, and it tracked the index's drawdown throughout the week. And we have seen Bitcoin recover from this morning's lows in tandem with the rebound in tech, but with momentum rolling over, technical sellers stepping in, and then the pro-crypto regulatory tailwind fading. This is still a real departure from November norms, with digital assets taking an uncharacteristic breather this month. Scott?
Do you have a view, or do the people that you speak to about this, on the notion that as popularity for crypto treasuries increases, the volatility around Bitcoin also increases, or as more money starts going towards crypto treasuries, maybe money comes out of Bitcoin as a pure play?
Precisely. And so much of where we saw Bitcoin breaking from moves in the NASDAQ came from this inflow, all these institutional inflows into the spot Bitcoin ETFs. And then this summer, you saw this surge in the digital asset trade, those DATs. And then that's what's led to more of this volatility as people move from spot trading and from the spot Bitcoin ETFs, which really gave a comfortable floor to the trade, into these more volatile plays where you're seeing these proxy trades for Bitcoin, for Ether, for Solana, and other altcoins introduce a lot more volatility into the market. And it's also not helping that we're seeing this more, liquid and thinning out of the spot market in general.